Hi everyone. Good morning. It's still morning here in London. It's 10 to 12. We've got the Bank of England rate announcement in 10 minutes. Could be quite an interesting one. Potential split on the board could be could be exaggerated. Maybe, may not. We shall see how that all transpires at the moment. Remember, we've had quite a diverse opinion on central banks. None probably more so than the Bank of England. So we've seen what characters like Megan Green have got to say, and how Andrew Bailey deals with it all in his press conference later. The chart up here on the left of me here, or the right of me, depending on how you're looking at it, is the FTSE on the 5 minute time frame with our crossing EMA strategy. Sorry, cross with our Bollinger Band and stochastic strategy. That was long earlier, got to target one, then it's retraced, and it's gone short again. Actually here, so it's gone short again then on the outside. So you ignore that one, and that's looking to turn. But you can see the trend this morning has been sort of downside. We got to the hourly chart, uh, flattening out. We're round about not shy at all time highs yesterday. Worry about what's coming in the budget in less than 3 weeks' time. I was weighing on sterling, so sterling's been weak, but the FTSE's been at these all-time highs. We just got to the daily time frame. We'll go back to sterling in a minute. FTSE all-time highs again yesterday. We went to 9,800, and we've cooled from there. Understandably, big round number again coming into play. So 9,800 on the FTSE. Continuing to move high. And you see here on the daily time frame, it's got looping higher, support by the 20-day moving average. The middle line of the Bollinger Band, just keep that long. But as you can see here, on the daily time frame, this strategy would have gone short or was crossed short here on the 31st, right at the end of the month. It's gone against you so far. Difficult to say where to put your stop loss. Probably on here would have been around the top of the Bollinger Band at this intraday. So it may have, if you moved it down on this move here, you would have been stopped out yesterday if you'd gone to all-time highs. But that is still short. We come back up. So we could be seeing some weakness potentially, only potentially, but the trend at the moment is outweighing that. If we look at the forex for sterling, but the sterling crosses, the main one obviously against the dollar here, 130.90. So we're under 131, we're under the key 132. Big down day this week here on Tuesday. Up a bit yesterday and up a bit today at the moment, but the daily trend, as you can see, is very much the downside, very much under the 20-day moving average, and has been since the 19th of September. Stronger dollar, lower lows, and quite a significant move here in that final week of October. The budget looms. Chatter today in the British press about taxes. Chancellor Rachel Reeves potentially taxing electric vehicles, some pence per kilometre or something. It's a bit like when back in the day when they were all encouraging us to move from petrol to diesel cars, and then diesel price went above petrol prices. That was a generation or so ago, but that was another Labour Chancellor, Gordon Brown, at that point. So very much in a squeeze. Rachel Reeves. They promised in their manifesto not to raise the key taxes, VAT, income tax, and national insurance to an extent, but they've already done that for businesses. So and screams from the left of the Labour Party and the left of politics for tax on wealth. So mansion tax coming in, inheritance tax looked at again potentially. I mean, everything's on the table. Obviously, a lot of this stuff here, 3 weeks out, is sort of dropped in to see how the markets react. The EV tax doesn't seem, electric vehicle tax doesn't seem politically sensible, but they've done some politically crazy decisions since they got into power, and it's obviously the press, dominated by the right wing, has given them a very, very hard time. Anyway, sterling down here against the dollar, bounced yesterday, and it's up again today. The euro, the other major trading partner, we're up to over 88, 87.99. So again, if you look at this on a weekly chart, you can see we're up at 18 months highs here euro against the weaker pound takes us all the way back to April 23. Uh, strong, a weak sterling against the stronger euro has been the story of most of this year, to be honest. But there we go. This is where it was the beginning of the year. It was back here, wasn't it? Somewhere. There we are. Beginning of the year down here at 82.40, and here we are at 88 for euro pound. And the other big one is obviously the guppy back over 200 today. And again, sterling holding up against the weaker yen, but that's the hourly chart so far today. It's topped out at 102. 201 today. 201.16 has been a high, but anyway, let's have a look at the calendar for today. I say the main news is the expected no change from the Bank of England, but we'll see. There's some I shared on our Discord group yesterday some findings from Forex Live, where they were looking at a potential cut yesterday. So we'll see potential surprises. It's likely to hold rates. There's too much uncertainty. I think the key thing for me will be this. How the members of the board look to cut or don't cut. Last time we had. We'll see what the minutes have to say as well. Remember, that's key. That they come out now. They used to come out 2 weeks after the rate announcement, but we'll see how Bailey plays the press conference as well in half an hour. So whether I'm still here for that or not, we'll see how the market reacts. We are. I want to really assimilate that, given where we are, literally less than 3 weeks to the budget here in the UK, which has already been put back. So interesting what consumer confidence in Europe looks like as well in a minute. But anyway, that's all about to drop at the top of the hour. No changes expected. Let's just go back to the cable rate, and we'll come down to the 5-minute time frame. So here this morning we've been long. It's been long. It went short there on that hourly chart. Didn't get to target. Stopped out. So the trend is to the upside. The trend is very much to the upside. Here's the 5-minute chart. That's triggered short here. If you're going to trade that on the data, your stop loss needs to be up here somewhere, because it's obviously whopping around. But that's gone short there at 11:50. 10 minutes, literally 10 minutes into the trade. And there we go. We're very much in the money. Target 1 would have been hit there, and target 2 would have been here. So I'm in and out. Thanks very much from there. If, again, you're trading the volatility of the news. So rates unchanged at 4% in the statement that's just come out now. Obviously, the rate's just broken. Let's have a look at the statement if I can. Vote has remained the same, 6.3. Prior it was 7.2. The statement is looking to move. So Breeden, Ramsden, Dingra, Taylor voted for a 25 rate cut. So 1, 2, 3, 4. 1, 2, 3. That's 4 voted for a 25 basis point cut. So it was 4. It was 5-4. Hence the weakness in sterling. 5 of them: Breeden, Ramsden, Deputy, Dingra. She's been out there, and Taylor looking for a cut. So it was expected to be 6.3. So that's Is it Ramsden or Breeden? I think it's Breeden that might have drifted across to the base, to the cut announcement from the Bank of England. So sterling short. Again, if you'd been trading this on this 5-minute chart, you'd hit target here. You've got short there at 130.90. Target 1 is 130.85. So there's 5 or 7 pips there, and then the bottom of the Bollinger Band's there at 71. So another 20 pips on the rate announcement. If you'd had your stop loss, above at the top of the Bollinger Band, which is at least where it should have been. So we're moving lower there. Euro pound, I would guess, is holding 0.88 quite significantly. There we are, 88.10 at the moment. So that's gone the opposite direction, as you might expect. And pound yen is still holding over 200, but spread a bit wide. Well, the spread is a bit wider on this one, pound yen, but it does move an awful lot of pips. You can see there, 7 just on the 5-minute time frame. We got to the hourly time frame. We compare the average move. There we are, 200 odd pips on pound yen, and if you compare that on the hourly time frame to the euro yen, you got 80, so it's twice as much. So therefore, the spread's a wee bit high, but your return is potentially much higher as well. Sterling on the hourly, around about 110. Sorry, is that the hourly? Yeah, about 15 pips at the moment, 14 pips on sterling on the cable rate. So the sterling is weaker on that surprise. Well, not surprise, really. I say it's one of the most volatile of all the central banks. Lots of opinions flying around, quite significantly. Yeah, everything's on. Everything's working okay. So we'll just flip to the FTSE. So if sterling's weakened, the FTSE might have turned around. So we look at the. It's interesting. It doesn't actually show. Give me the FTSE for sterling. Should have moved higher. So there we are. That's the cross to go long there. That's the touch. We haven't waiting for the cross. The cross has happened there literally 5 minutes before. And again, if you're using a standard account, guys, this is a major news event, but we're 5 minutes before it. So you could have taken that long there using this strategy here. So you would have got long here on the FTSE. Oh, excuse me. This horizontal rate. So you would have got long there around about what's that? 9742. Spread's relatively tight there, just 1 point, and you're very much in the money, 9757. If again you want to risk trading the news, on a 5 minute time frame, just follow the rules. So 5 minutes, you got in there at 11:55. Remember, with a standard account, it's 2 minutes before and 2 minutes after is when you're not allowed to trade. So what's happened here with the standard account? Well, it's been down and then it's crossed there, but see, that's crossed actually on the news, so you wouldn't be able to trade that one on that 2 minute time frame. But obviously, you could wait, and the 2 minutes is up afterwards. So there's the 2 minute. So you could still, although it's moved, it's moving in direction. The Bollinger Band is moving. We're moving higher, so you could still. And again, a lot of people get freaked out about buying at highs, but you could have still there with a standard account. You still could have got in on trading the FTSE at 9757. Obviously, with the spread, you would have been a bit higher than that. So say about there, 9758. But you're still very much in the money. Still 10, 15 points to the good. This has still got momentum to the upside. So we've dipped and rallied. We've got the K crossing the D, and we're moving up. There's momentum to the upside. So again, depending on the strategy, the time frame that you're using, obviously the returns are different, risk is different, but it's all about trading what fits you, what fits your comfort. I know a lot of you I trade right down at the tick and the minute time frames. With an express account, so that they can trade the news. But again, see here we were short here. That was short there. It was a continuation short. That would have got to target 1. It's not got to target 2, which is the other side of the Bollinger Band using this strategy. We've then crossed again. So this one, the 1 minute time frame, crossed there. So again, 11:56 on the 1 minute time frame. We've crossed positive. We've gone to touch, interestingly, there just before. So you might have got out. But again, trading this short time frame just ahead of the news, where would your stop loss be? Well, if you put it down where the latest price action was, you'd have been stopped out on the actual news. So this is the risk, guys, of trading these short time frames. So the volatility of the news, as I say all the time, you remember the market makers, the big banks, the guys that are making this market, they will see where they see where the cluster stop losses are. They know that. But that sometimes they use the news announcement to get rid of positions or add to positions, and they use the volatility of the news, even though ultimately it's been positive. Obviously, the initial reaction was all the way down here. So they're pushing it lower. See if they can swipe out these stops down here, which they would have done there at 9735 or 9736. Pushed it to 9733 before it's turned around and gone back up to the other side. So that's the risk of trading the news. Regardless of that, though, even if you've been stopped out that as a 1 minute trade, that's a big, strong, positive candle on the close of the news. You could still add there. It's still positive. It's burst out of the Bollinger Band. That's and we've got that momentum because we've had the squeeze in there. That's what you see. So you ignore this and you just run with it, and pulling your stop loss up behind. So as a 1 minute trader, my stop loss will be here now, right behind the last candle, or that candle there, 9762. So locking in profits as we move up. Obviously, it's looking to cross to get short at some point. Where will it get short? Well, who knows? I mean, who cares in that sense, because we're profitable. But look, there's a bit of a pivot area we're into now. 9770, 9770. There's a bit of a run through there. There may be some more momentum here to this top here to 9775, 9773. So 9770 is where we're approaching. The top of the Bollinger Band is there now. So maybe trying to take my profits out. The other way to do it is, on the candle change. So we've had strong positive green candles for the upside. And then that's obviously the initial reaction. So ignore that one. That might have been your first target when it first turned red. But again, maybe a buying opportunity. We're still long. This strategy, guys, remember, is looking to go short now. It's edging. It hasn't yet crossed. So patience. This is only the 1 minute strategy. So see where we go. It looks like it's going to be 9770. Again, round number, 9769, 9770. Round numbers in play. We've gone long. Thank you. On the 5 minute, we were successful. This 1 minute would have been successful. And the 2 minute, if we'd waited till we could get in. If we go back to the 2 minute, there we are. Wait till there's the 12. There's the 2 minutes past. So we could have bought there. We're still in the money. And again, dragging your stop loss up there on the 2 minute. And 2 minutes still green. This is a different sort of strategy area. There's that you might want to look for 73 potentially on the 2 minute, but we're still green, so we're still long. Thanks very much. That's yet to cross. Obviously, the 5 minute, which is my preferred short-term time frame. So again, to be honest, if I traded that on a 5 minute, got in there on this cross here, my stop loss probably wasn't long enough. I would have stopped out. So I'd have done the same thing. I'd have gone long there. I'm happy to have bought that there as a 5 minute trade. So the 2 minute guys got in here. The 5 minute guy has got in here at 9762, 9758 for that 2 minute trader, and the 1 minute guy that's trading the news again. It's how low your stop loss was. I would have, knowing this volatility, the potential volatility of the news, it certainly would have been below the low of the day. So it would have been a bit, but it probably, in all honesty, if I was doing this manually, it probably wouldn't have been low enough to not got stopped out, to be honest. But anyway, accept that and now go long, and we're up and running. So a bit of hesitancy here for a minute, another hesitancy for a minute, but we're still moving higher. But you can see, charts don't lie. Patterns repeat themselves time and time again. We have had a cross here. It's a weak one at the moment on the 1 minute time frame. So that might be enough to get me out if I'd got in here again. Got in at 9752. I've been filled there. Obviously, it might have been a bit high because that spread they saw. Spread's tightening up a wee bit there, and out at 9768. So 15 points on the FTSE on the major announcement. The Bank of England announcement is the most important thing that affects sterling. And today, let's just go back to the calendar for everyone. We've had, let me update this. Proxy calendar. There we go. Today. I don't want all these companies, but anyway, sterling news is here right in the middle of the day. 4-3, 5-6 was the 5-4 was the surprise. It wasn't expected to be 6-3. It was 7-2 last time, so quite a change. Although ultimately the rate hasn't changed. So 4 of them have voted for that cut that I was rattling off before. Breen, I've forgotten his name now. Who was it? There we go. Right, the statements come out. So Breen, Ramsden, Dingra, and Taylor looking for a cut. CPI inflation is due to have peaked. Progress in underlying disinflation continue. I'm just summarising the statement here. You can read it yourself on the Bank of England website. I'm just trying to pick out the key points. Restricting of the monetary policy has fallen as bank rate has been reduced. Evolution, the outlook, further reductions positive. Progress on disinflation continues. Bank rates likely to continue on a gradual downward path. So disinflation story, particularly in services, is what the story is. Green Lombardi man pill place greater weight on risks and the persistence of inflation. It's a phrase I use all the time as well. Persistence, and it does hang around, requiring more prolonged monetary policy restriction. These members were concerned that it could stall as they place particular weight on the risk of higher inflation or structural shifts leading to inflation persistence. Bailey, remember the chairman, the governor, the party, and he's got the swing vote if he needs to. He didn't do it last time. Bailey judged that overall risk to the medium-term inflation had moved down to become more balanced, but there was value in waiting for further evidence. Hence, there's no change. The other four, as we said, dissented in favour of a cut by 25 basis points at this meeting. These members attach a greater weight to downside risk, given that they would reflect a continuation of current trends, with particular concern that household savings would remain elevated and weigh on consumption. People worrying about the budget that's yet going to come. Are taxes going to go up? Real taxes, or are they going to, is the Labour government going to focus on the wealthy, focusing on not on income, but on actual stored wealth in things like land and property and inheritance and all that sort of stuff. Dingra and Taylor, interestingly, also argue that policy was already significantly over-restricted. So Dingra and Taylor remain the bears on, the hawks on this market, looking for a significant cut. Coming to the meeting, traders were placing a 32% of a 25 basic cut. So that, I was a bit surprised that when I shared that yesterday, and understandably the pound has softened because there's a bit more hawkishness than a dovishness, and again this blah blah about waiting for more data. A big wild card in the month ahead before December meeting will be the autumn budget, as somebody's just written here on Investing Live, and that's the key one. It's 3 weeks yesterday, 26th of November. I think there will be some significant announcements from the Chancellor. She didn't rule out the key political policy of not raising not raising income tax. But she's messed up a couple of times. Obviously the press have said that, but the markets seem quite okay with it. The bond vigilantes that so very quickly cut the crazy Liz Truss budget to pieces are on side with Reeves at the moment. But she's got a very delicate balancing act. She didn't need to be so fiscally prudent, committing to this, getting the books balanced again. But this whole is 20, depends who you read, 24, 22, 20 billion pounds. So interest rates remain at 4%, and at the top end, I mean, that's what businesses will argue. That's what people paying their mortgages, their rents will argue. At the top end of the industrialized countries, if we look at a comparison of interest rates compared to the other big industrialized areas, you can see that the rate in the UK remains top of the charts. Well, I can't find it. Top of that chart. Where's it gone? There we are. You can see that there, can't you? The US, UK at 4%. Australia 3.6%. That didn't change yesterday. Kiwi 2.5%, 2.25% in Canada, 2.15%. Remember in euro, and under 0.5% in Japan. So with the Americans at the top of the tree of the industrialized countries as far as UK's concerned. So anyway, what's happened? There we go. There's that short clear now. There's the touch. So we're short now. We've got out of that long, and we'd have gone short. Not there, possibly there. Yeah, there. So we've gone short now on that one as it's rolled over on the minute chart. There we go. There's that strategy, because we've touched the outside of the Bollinger Band. We wait for the cross of the K and the D line. Remember the stochastics, 10, 6, and 3 guys, and down we go. First target has been missed. Actually, we just smidged out of the. But having had such a good run, 3 minutes down, it's bounced again. So I may be closing that. Having had a nice run on the upside. 2-minute trader would have possibly crossed. There we are. 2 minutes traders crossed at this point at 12:14. 14 minutes after the deal, we've had a long. Now we've gone short here, and we're actually out of the money on that one because we've gone short here, and it's gone against us. Our target is this one here. The 5-minute trader, we might still be long. Yeah, in fact, we are still long. We haven't crossed. Lots of volatility. You might have hanging on to that. Might get a bit twitchy. That might get to actually end up flat. So that's coming down on the FTSE. So FTSE topped at 9,772. So we didn't get to 7.5. We got to 7.2 there. You can see that on the indices when we were looking at before. If you just go back to sterling against the it's not working. Forex pair. So let's have a look. We're 130.73. So again, there's the cross, as I say, ahead of the data. Down we go, and it's bounced again now. So it's got target 1, target 2, a 5-minute. Let's go the 2-minute trader. It's crossed there. He's gone long there. That's actually gone long now. 2-minute for cable. Gone long at where we are now, basically 130.73. In fact, it'd been a bit higher, wouldn't it? 130. 74.4 you would have been filled. That's gone long for a 5-minute trade. You see the cross? You can see that's what we're looking at. We're waiting for the cross of the. And once we've touched the outside, so we short was earlier, 1, 2, and then out, and then waiting. So we've waited there 2 minutes. We waited 12 minutes after the announcement before we've gone long. And the 1-minute trader on the cable, right, a bit more volatile than one would expect. So we were short, and the 1-minute trader has gone short. That's flattened and probably not got in till about then, or even then. So I mean, you've got in here. There's target 1 already, and target 2 is just there. So that's been successful as well from both short and long positions using this Bollinger Band as stochastic setup. Very, very simple. So 2 of the oldest and most reliable, most used, shall we say, most popular simple indicators for people to understand. Stochastics for volatility, and Bollinger Bands for all sorts of things. Trending, whether you're up or in the upper half or the lower half. Volatility, the squeeze of the band is really also really can be quite sexy, and it works on all sorts of time frames. So as far as the higher time frame trend is concerned, sterling's coming back against cable. That's been maintained, although we're down from the day high, so we can't get over 131 today. So we're down at 130.75, and the daily trend, it will obviously not be particularly interrupted as well. It's still very, very weak. That massive sell-off we saw ahead of obviously today, and possibly the budget as well on Tuesday. Bounced a bit yesterday, and currently to the upside today, but we went under. We tested into 130 basically is the story of this week so far for sterling, but we've had a bit of a bounce there against cable. So we are down. Right, let's have a look at elsewhere. Crypto, Bitcoin remains weighed. Remember, we went into that 100,000 level. We are still under 103 today. Although we did have an update yesterday. We did go into that 100,000. Oh, it's lost. I should put that back on here. Horizontal line. There's that 100,000 level. Make it a full. So many times I've done this. I'll need to see what I can do about this, or just put less lines on 100,000. Under it on Tuesday, under it again yesterday, the key 100,000 level. But a positive day yesterday, up about $3,000. But you can see the trend remains very much to the downside. As we discussed yesterday, it's a big, fat, round number, 100,000, but technically it hasn't played in the Bitcoin story. It hasn't been a key support or resistance area. It's sort of blasted through it, and we've been sort of chopping through it. It's not a key area. I mean, did provide support there at the end of June, actually. And will it provide support here at the beginning of November? We shall see. But the trend is very much to the downside. My key, if you've been watching any of these, level for me for Bitcoin has been 112,000, which is just around about there. Some people ask me why 112. It was, and I'm not gonna. It just is. Okay, it's been a pivot area. It's been attracting, pulling prices in and out. So that was the key break. And as you can see, for me on an end of day basis, it was at the time it was coinciding with the 20-day, which is key for me. 21 EMA. This is the 20, so it's a little bit different. But anyway, splitting hairs a bit. It's short basically, and it's been short since the end of October. And it's had a weak November so far. The Bitcoin market, and it's still down, but certainly looks like there may be buys around the 100,000 level. Let's go through them all. Energies again sideways, nothing to get excited about oil. If anything, we're going lower this week. Again, the 20-day is provided quite a key support area, so we're at $60 again. We got to inventories later on today. I got confused about when everything's coming out. Or was it yesterday? I think we got official inventories today, haven't we? It's all been mixed up. It's normally on a Wednesday, but I don't think any came out yesterday. Clear. Just put the US on. Let's put the United States. Where's it gone? Yesterday's, was it? The inventories out yesterday. In fact, there were out. So it was a big build. In fact, a huge build, 5.5 million from an expected drawdown of 2.5 million. And last week was a drawdown of nearly 7 million. So it's a 12 million build in inventories down in Cushing. Hence the weakness in the gold in the oil market yesterday into 60, and then we bounced a wee bit today. So we just got the daily hourly time frames to move down yesterday when the data came out, and we did again breach the 60, and we went as low. In fact, we went as low as that was this morning. European trades at 59.60, which is, as I say, interesting. I'm going to mark that on because that's an interesting low. 59. It's not the 58 level, but that's an interesting low. 59.62. So weakness in the oil market persists. Brent 64, under the key 65 still, but showing a bit more resilience than WTI. Forex, we've obviously focused on sterling, and it's very much in focus. Indices yesterday, we were bounced back 24 points, nearly 25 points on the S&P 500, 6,796 we closed last night. Got the daily again time frame. Remarkable resilience in and testing the 20-day moving average off it. So we were up yesterday. We still haven't recounted that big sell-off we saw on Tuesday, but we're up for Wednesday. We're up a tad today in futures. We're back to 6,800, but that down trend is set. We found buys at the 20. We're still at highs. The gaps now, that gap from the 24th to the 27th was filled yesterday. 20-day was tested. It's this good technical slowdown. It's not a massive move. All those things you could do. The Fibonacci from that all-time high just last week to the 20-day or the low we saw yesterday. Where are we in play? Well, the 50% of that decline is still achievable today. And that comes in at 6,821. the key fib level, the 61.8 golden ratio at 6846 of this leg down. If indeed this leg is over, it's too early to call that's over. But you could certainly argue that the panic from Trump not getting his peace prize and picking on the Chinese again, tariffs, that up leg, is over, you could say. So where do we retrace to? Well, there's the first 38 level, the first key fib, and the 50 level is where we went to yesterday. So there we are, Fibonacci playing ball again. So we went to the 50, nothing to test so we're still in that range and we're back over that range. So if we just take that one off, if I delete that one and leave that one on, where are we now? You can see the 38 has provided support because it's bang on the 20-day moving average here on the S&P. So it's looking relatively positive. Some stonking reports yesterday. One of my early investments back in the early 2000s, late 99s, now quoted on the US stock stock exchange, had a really good earnings yesterday, up 7% at 1.75%. Robinhood beat as well, but they were down 4%. Tesla closed up 4% yesterday. And Jason Wang was interviewed later on yesterday talking about China will win the AI race. Whether that's a political statement or he actually really means that or not, we shall see. And obviously the Supreme Court, Trump's Supreme Court, which it is now, weighed in on his tariffs. So I'm not suggesting anything that the president would have been too pleased about. So it's not all plain sailing, even though he's elected or nominated many people to the Supreme Court and dominating 5-4 now, quite significantly. Might even be 6-3, I think, in favour of certainly the Republicans, if not Trumpism. But anyway, so that they're still querying the tariff situation. So at the moment, stock markets are just passing that as they're passing the lockdown, which is now in its 30. I've lost count, to be honest. 35th day. But yesterday, bonfire night here in the UK, the 5th of November, was a key day when food stamps weren't going to get issued to people. People were really suffering that survive on those food stamps. Lots of philanthropic work kicking around, but that's not the point. The government should be supporting these people, or are scheduled to support these people, but Trump is in no mood to do a deal. The Democrats were talking about perhaps coming back to the table, as we said last week, because of this issue with the food stamps disproportionately affecting their voters, and all politicians look after their votes first, don't they? So yeah, maybe we might get a resolution this weekend, but people are talking about, this could be easily dragging on to Thanksgiving at the end of the month. But anyway, see what happens as we go into the second half of the week. Well, we are in the second half of the week, aren't we? See what happens over the weekend as well. And news breaks very, very quickly, obviously. So we'll see. There's nothing at the moment. As far as I can see, it was all about sterling. It was all about the move for sterling. So let's just go back. So that was the American markets that were up. So the Nasdaq was up, and the Dow was up. Nasdaq was up 0.65 of 1%. The Dow was up 0.48 of 1%. So they're all still bid. Well, I was with a client this morning. We were using the 5-minute time frame in this setup. We made a nice little trade here this morning. There's the cross there on that 5-minute. We set our target. We were going out, weren't we? Around about the 24,000. There we go. We got out what appeared to be at the top of the market at the time, 9:15. But you can see that one. There we go. So we got in on that, following that cross there. We got in here. In fact, we got in there, didn't we? In fact, we got filled there and up, I think, is what we made on this demo. Where was it? It's this one here, wasn't it? 20. Where did we get in? 23,974. So 97. Yeah. So there we are. We got in at this candle here, 974. We got filled. We had a little target at the round number of 24,000, and eventually, having come back against us, pulled the stop. Eventually got to target 2. The other side of the Bollinger Band at 523. So what's happened? here. There's the outside. That's gone short there. So the DAX on this strategy there. So you could have been short there, and it's gone down to target one. Nice, simple, following the rules. And again, half. Well, because we got in after the fast target, which is normally here, I would have taken half off on the Bollinger Band, and then we continued to decline. I didn't know that was going to happen. However, that's a big bodied candle. So I mean, just happy to take half and leave the rest of the half on. And now we're crossing, so I might have got out there. So again, another short, successful trade on the DAX. I do like trading the DAX, guys, on these time frame. Not around about this sort of time because it's it's quite quiet. I like it around the Open, the German Open, and the US Open later on. So anyway, it's it can be quite easy to make money. It can be very difficult. It's all a mindset, as ever. So welcome to the prop trade, everyone. Tomorrow, well, we may get. It's unlikely, but obviously there's not going to be no non-farm payrolls tomorrow. We will get the University of Michigan key important consumer sentiment. There's more PMI data to come out. Just put on Europe, Germany, Australia, United Kingdom tomorrow. I'll do for now on it. We applied it for tomorrow. So a host of PMI data this week. The services we saw yesterday better than I expected. The inflation the manufacturing still showing contraction in that sector. So and some strong earnings from some of the companies reporting this week. So it could be a record third quarter when it's all done and dusted and all the numbers are done together. It's looking very strong so far. So the impact of tariffs, haven't hit those companies yet, although they are the ones that are paying it. So will Trump be proved right? We shall see. So welcome, my friends. If you're new to the proptrade.com, two-step phases, one-step phase, funded account is there for you. Express challenge is the one-step approach. Phase one, the target's a bit tighter. It's 12% as opposed to 8 or 10%, but you get there in one step. And 80% of your winnings can be claimed every Friday. Second time you do it, you actually get your payment back as well. A $10,000 account is $85 if you're new to us. New 25, as it says at the bottom of the screen there. Takes 25% off that, so it's just over $63. Gets you $10,000 worth of equity to play with. Want a bit more? 50,000 is quite a step up. It's 10 times, 5 times more. So 25,000, around about $150, $130 with a discount, and that's a significant amount. So you've only got one step, and that means that remember the account you trade is the one that you take to the funded stage. So prove yourself, and you got $25,000 of equity to play with, and any of the profit that you make can be yours. I say after 3 days. Claim it on the close of business on the Thursday. You get paid on the Friday. Do it again next week. Do it again next week. It's as simple as that. Have a plan, trade your plan, execute your plan, accept you're losing trades, guys. That's what most traders get wrong. They can't accept losing, whether it's 1%, 2%, 3%. They can't accept losing. 0.5%, $50, $5, whatever it is, you've got to accept losing trades. It's part and parcel of trading. The rules here are very clear. There's no hidden, there's no consistency rules. There's no silly, rules that are in the fine print. We don't want people trying to con us or con yourself, which is what you're doing ultimately. If you are a good trader, this is a great way to generate capital very, very quickly, and also with minimum input. So you're happy to pay you if you're doing it properly. Try and be clever and conners. We've been around the block a long time. We got lots of risk managers. We got lots of clever people supporting us, clever systems. So it's no need. There's absolutely no need. If you're a genuinely good trader, we're happy to pay you, and they're the sort of people we want on board with proptrade.com, because we're not going anywhere. We've been around the block. We want this to grow and continue to grow. We're into our 13th, 14th month of existence now, and we're very, very proud of what we're doing. Okay, so take care. I'll see you tomorrow for a weekly wrap. Watch our social media channels as well. We'll have a weekly video out again this week. So take care, be safe, and I'll see you all again tomorrow. All the best, everyone. Bye-bye.